Well, Bitcoin has stood the test of time again and again and again. There is a reason it's received the nickname the honey badger of money, or to shorten that up, the money badger.
Money badgers. They are notoriously aggressive.
But this week, Bitcoin is going to face its toughest tests of all, against the US government. Will it prove its resilience, or will it crumble under the pressure of the government? We'll find out in about 10 minutes, because it's time for Chico Crypto. Well, pulling out the Bitcoin price over the past 7 days, there is no doubt BTC has had a rough go of it. The price has fallen from above 44 grand last week to, as of yesterday, sitting above 38 grand. Expanding out the price chart, we can see once again the price is going back into a range we have been accustomed to, the 40K to 37.5K range. Throughout the end of February, we spent most of our time there, and now we are once again bouncing around in this range for the past 4 days. So the question on everyone's mind is, what will be the break of this range? Will we break below it and officially enter a bear market? Or will we once again break out above it and turn bullish? Well, if the US government has their ways, it will be the former, a break below it, and we officially enter a bear market. What do I mean? Well, the crypto executive order, which has been talked about so much, is finally coming this week. Bloomberg reported this with the article, Biden to sign crypto order as firms face sanctions pressure. And the article states, President Joe Biden is set to sign an executive order this week that will outline the US government's strategy for cryptocurrencies. The order will direct federal agencies to examine potential regulatory changes, as well as the national security and economic impact of digital assets. The White House's approach to crypto has attracted fresh attention in recent weeks, after the US and its allies levied sanctions on Russia, prompting concerns that organizations and individuals could use crypto to evade the restrictions. The executive order, which has been in the works since last year, will require federal agencies across the government to report later this year what they're doing regarding digital tokens. The plan is expected to begin carving out roles for agencies across the government, from the State Department to the Commerce Department. The White House's directive is also expected to address the possibility of a US-issued central bank digital currency, or CBDC, though it'll likely hold off on taking a firm position because the Federal Reserve is still studying the issue. So my friends, crypto is going to be in the government hot seat this week, although it may not be as bad as it seems. Yes, government agencies are going to be assessing crypto and digital tokens, and they're going to have to report their findings to the government leaders. But it's not like any new law is going to be enacted right away. How do I know this? Well, you just have to go back to an earlier Bloomberg article on the issue. All the way back in January, Bloomberg also reported on this crypto executive order in an article titled, White House is set to put itself at the center of US crypto policy. And the article stated, the late-stage draft of the executive order details economic, regulatory, and national security challenges posed by cryptocurrencies, said the people who asked not to be named, discussing internal deliberations. It would call for reports from various agencies due in the second half of 2022. So my friends, the bears are going to use the narrative to push down the markets. A crypto executive order, new crypto laws, the end is nigh. But in reality, there won't be any new laws. There won't be any legislation drawn up this week. This is just asking the federal agencies to begin looking at crypto and to report to their government officials their findings. This was always going to happen, and now it finally is. We just gotta hope and pray that they do report on it justly and with open eyes. Also, people need to understand what an executive order is. An executive order is not a law per se. It does not have the power to force law. Only the legislator is granted that power by the US Constitution, although it can be used to direct law under emergency powers. This executive order will be a directive of how the executive branch should enforce a law. It is an interpretation and manifestation of action according to such law. This executive order will most likely be interpreted under the International Emergency Economic Powers Act. Yes, laws could be enacted with those emergency powers, but those laws can and will be challenged if they are overreaching. And the White House knows that and doesn't want that. That is why I think there will be no laws or legislation enacted with this order. And for the most part, it will be a nothing burger. So the executive branch is coming after crypto. But this is not what we should be worrying about from the government. We should be more worried about what's going to happen from another branch of the government, the Fed, the Federal Reserve Bank. Now, if you didn't know, there is something coming this week that is also very important to crypto and the markets all around. Inflation data for the month of February will be released Thursday, March 10th. Now, the last time inflation data was released, that was on February 10th, and we got some surprises. As we can see from the press release, they said over the last 12 months, the all-time index increased 7.5% before seasonal adjustment. Yeah, year over year, inflation hit all items with an increase of 7.5%. That means $1 back in February 10th of 2021 was worth 7.5% more than $1 February 10th of this year. So what happened to the Bitcoin price when this data came out? Dump, baby, dump. As we can see, that day before the executive order came out, February 9th, Bitcoin was front run, pushing it up to 45K. But then dump, and just a few days later, it was below where it started, bouncing around 42K. The markets obviously didn't like the high inflation data reading of 7.5%. I wonder what the expectations were. Well, as we can see from this CNBC article, the January inflation data was projected to rise by 7.2% year over year. We came out 0.3% higher at 7.5%. So what are we expecting this time around? Well, as we can see from this XM research article, they say the headline measure is expected to edge up to a new 40-year high of 7.8% year over year. And the gauge, which excludes volatile food and energy prices, is forecast to jump to 6.4% year over year, further deviating above the Fed's 2% symmetrical price target. The headline measure for all items is expected and projected to hit 7.8%. So what does that mean? Well, if we come in and hit the target or come in below, that will be bullish for the markets. But if we come in higher and 0.3% higher like last time, that would put inflation at 8.1%. It wouldn't be good for the markets overall, and I would expect a similar reaction with the Bitcoin price, a deflation down over the next few days after the reading comes out. Although, unlike in February, we have another federal government event, a meeting that could affect the crypto markets. Just 5 days after the inflation data comes out, the federal government is meeting for another FOMC meeting, where they could do what they have been alluding to for a while now, and raise those interest rates. Yeah, March 15th through the 16th, we have another Fed meeting, FOMC, and it is projected they're going to begin raising interest rates to combat what we just talked about, growing inflation. So what is the Fed going to do? Will they raise those rates, and by how much? Well, last week, the Bank of Canada raised their rates, and as we can see, they raised them by 0.5% in a largely expected move. So are we going to fall in line with our brothers up north and raise them by 50 basis points, or are we expecting something less? Well, according to Morgan Stanley, it might just be less steep. The Morgan Stanley CEO spoke, and FX Street caught the important quotes. CEO James Gorman said, "You have to raise rates, but you don't want to tip the economy into recession. If you tip the economy into recession, you get stagflation. That's really bad." I met with Powell days before departing for Australia. Believed the central bank had planned to launch its tightening with a 50 basis point hike, but recent events had lowered that ambition. 50 basis points was baked in, but now with the war in Ukraine, this has lowered ambitions. So what will happen come March 15th? Well, according to Double Line Monday Minutes, a 25-point basis raise is coming. They said, off Fed Chairman Powell's remarks to Congress, the probability of a 50 basis point rate hike in the Fed funds at the March 16th FOMC meeting, Jeff Mayberry notes, plummeted down to 0, with a 92% probability of a 25 basis points increase. So my friends, the chances of a 50 basis point increase fell to 0. Now everyone is expecting a 25 basis point increase, which the markets are baking in as I speak. If expectations do happen, I would expect the markets to have much of a non-reaction. But if they do the unthinkable and raise them by 50 points, expect the markets to tumble as the Fed gets more aggressive to combat this inflation. The government is coming for crypto this week and next, directly and indirectly. It's time to stay on our toes. Cheers, viewers. I'll see you next time.